Welcome to the House of Legends podcast, where great women become exceptional. I am your host, Graciela, founder and CEO of the House of Legends by Graciela, a mindset coach and mother of three beautiful kids. My mission and passion is to provide you with the tools that will allow you to unlock and bring out the best version of yourself, which is the key to all change. Some of those tools are mindset, identity work, and emotional mastery. Not only that, but I will also bring you powerful conversations with legends like you, showcasing their journey, life work, and allowing us to learn from their experiences and insights. So don't miss an episode. Tune in each week to the House of Legends podcast and let's unlock the power of your own legend. Let's dive in today's episode. Welcome back to the House of Legends. As we promised you, we have the second part with Juliana Uto. Oh, okay. Before we press record, we were like just diving into the conversation, and I think you will really appreciate this because I was sharing with Juliana that many of us coaches, and I'm not just like nor generalizing this, but we know how to bring money into the table. But when it comes to investing, well, I'm just going to speak with for myself. I was just aware of crypto and real estate. I was really ignorant in that area, and on the when I came across Juliana, I started to questioning things, and now with the first podcast that we already did, I was really mind blowing with the information and seeing the other side of the paradigm and seeing new possibilities, not only about bringing more money to the table, but creating real freedom. And I think that is one of the new paradigms that are taking place, not only this year, but from here moving forward. We want to bring money into our lives, but also create this true wealth, because not making money is not true wealth. True wealth, like you mentioned, Juliana, is to reach this point where we can decide if we continue to do what we're doing right now, or even sell it and still bringing money into our table.
Yeah. Yeah, 100%. I mean, I think it's really important for people to understand. We're kind of a society where we're so focused on kind of short-term dopamine hits and everything happening now. And there is a very real value, I think, in thinking long term, right? So the 70-year-old me, the 80-year-old Juliana might not want to hustle like I do today, right? At some point, and at any point, even today, there's such freedom and peace of mind that comes from having choice and having options and not having to be beholden to your business or to clients or the market, or once you've secured your financial freedom, like that is the ultimate path to really live, I think, abundantly and prosperously, because now you can truly make decisions from like what is most in alignment with what I desire to do, the impact that I want to make, what I want to create. When you take money off the table, I mean, that's an incredibly privileged position to be in, and I'm not here to say that I've solved for it 100%. I'm still solving for it, but I do think that we need to start much sooner than a lot of people are thinking about starting. So my my invitation is to really just understand the math of what is your current lifestyle costing you? Like, what is your ideal, and it doesn't have to be extravagant, but like what is a good life for you? And what does that cost you? Like, is your house paid off? Do you have a car that's paid off? Do you take, 2 to 3 to 4 vacations? What do those look like? What's the price of that? And if that was as good as it got for the next 20 years, and you got to do that, year in, year out with the people that you most care about, buying organic food, or like having a gym membership, or your yoga or whatever you do, right?
Yeah.
Can you do you have a nest egg that can kick off the cash flow to cover that without you having to work and exchange your time, energy, effort for it?
Of this way that you are actually allowed to think, even is to zoom out and see the bigger picture, because so many times we get caught into this dopamine rush, or the business is going really great and you have clients and money is coming in, and we only think like what is going to happen in the next year or 2 years, and we don't stop really to think about how my life is going to look like in the next 10, 20 years, or even 30 years, because we don't want, just like, I don't want to think about that. But it's important to, like, the process that you mentioned, and it's a process that any one of us can do it, just to sit down and analyze what is your life looks like right now, or what are the things that you want to experience, and how much those things are like cost you. And
Yeah.
from deciding and analyzing if you actually have the assets that can pay for that, nor not something that depends of you. And I think when we start thinking in that way, we start attracting new opportunities, new ideas, and women like you, Juliana, that are really like, you have skin in the game. You already know all about this. You're an expert when it comes to this, and you can just guide us in what are the best ways to start investing. And that actually is connected with the first question here. If someone is listening to this podcast, and most of the listeners are either mentors, coaches, healers, they're in network marketing, and she's a, let's say, let's put a number, she's making, I don't know, like between 30, 40, 50K, even 100K per month.
Hmm.
She's, maybe she has her house, she's not currently investing. What is the first step, if I can mention a step or process or protocol, that she can take to move move into that direction in true wealth?
Yeah. So I think it's really important to make a distinction between income and cash coming in a month versus wealth and assets and net worth. Like they're in different universes, right? And while it's the thing that the conversation, I think, prevalent online for the most part is, celebrating cash in. First of all, cash in is a vanity metric. It's let me caveat that. I think it's impressive. Anyone that can generate 30, 50, 100K a month is, I mean, that is like incredible. Most CEOs, most VPs, most professionals don't make anywhere near that kind of
Money.
salary, right?
Yeah.
So it's a massive privilege and gift and all the things. Now it's important to talk about profit at the end, right?
Yeah.
What is your team? Like, what's your profit? Like, that's your revenue, and that's great. But at the end of the day, it is a bit of a vanity metric in that, what does it cost you to generate that? And nobody talks about that, right? Everyone's like, I had this, cash coming in. Yeah, but did you have a big team? Did you spend a bunch of money on branding? Did you put on a big event that cost you, 98%, 90% of your revenue, right, in expenses? So it's important to be honest with yourself. I mean, in terms of what you do with your sales and marketing, that's on you. And there's an element of, I think, just feeling good about how you're doing business and the conversations that you're having and the metrics that you're putting out there. And obviously, those should be um, truthful. But ultimately, you have to be honest with yourself and look at the numbers, which are like, what was your net profit? And then finally, where I always start with women. I'm like, well, let me see your balance sheet. Let me see your assets and let me see your liabilities. And let me see your revenue coming in and what's the source of that and how replicable is it? How repeatable is it? Right. And I mean, the women I work with are some entrepreneurs. A lot of them are professionals. So, doctors, lawyers, kind of that kind of thing. Um, they they have assets. I mean, they have really high salaries or incomes in the case of entrepreneurs. Some of them have assets, and some of them it's quite shocking. Someone who makes $1 million a year and has $250,000 in assets is like you're actually not doing that well. Sorry to break it to you. You know, like it's not great. And so I would the invitation for these women is to really think about what are the assets that you're building, and let's start investing so that what you're celebrating is that you've increased your net worth by 1 million, not that you had 100K cash month.
Okay. And when you said investing, and I know you mentioned in the first podcast, and by the way, ladies, if you listen to this, I strongly suggest you to go to the part one, because in that way you want to have a better understanding of this conversation. What are and I know, like I said, many of us we don't have an idea, but after that podcast with you, I was just like doing my research. But what are the first move? And I know if we want to go to the $1 million, or what are your recommendations where she or he can start investing?
Yeah. So I'll just preface this by saying, like, none of this is investment advice. It's not financial advice. I'm not a financial advisor. I'm actually not financial advice or legal or tax or any of that. But I would say, you know, one of the biggest indicators of your returns, financial returns, investment returns, is how you've constructed your portfolio. So portfolio construction, and all that means is what kind of assets are you invested in, right? So if I look at your assets, and the bulk of your assets are your primary residence, as an example, well, you have to think about, like, that's not, you have to live somewhere. And so if you're looking for cash flow at some point in the future, that your primary residence is not going to give that to you. So living in $1 million house is like nice, but it's not the best. If that's your only asset, then you have, again, a little bit of work to do because you want to have assets that generate
Point.
some sort of cash flow, right? That can be through dividends, or that can be through capital gains, or that can be like different ways of generating cash flow. Generally, you want to have a diversified portfolio. So what does that mean? So that means that you have some money in equities, you have some money in, and again, there's diversification within the and equities are just stocks, so publicly traded stocks. You might want to, you know, the US stock market is the biggest stock market in the world right now. It's quite overweight technology stocks. And so as much as you might own the index, you actually own the top 7 companies are driving the bulk of the results of the index, meaning Nvidia and Tesla and Apple. But you want to have some exposure to equities. If you are into real estate investing and you enjoy that kind of investing, there's many different ways to do that, to invest in real estate and have an exposure to real estate. You can have a part of your portfolio in that. I invest a lot in alternative investments, which are like private equity and venture capital and angel investments, so startups. Again, there is some guidelines around how much of your portfolio should be allocated to these kinds of investments, because they're high risk, high return. So it'd be like, you know, Airbnb, Spanx, like these companies that go on to have billion-dollar exits. It sounds amazing and sexy and like really cool to say that you had a unicorn exit. It's what a company that has a billion-dollar exit is called, a unicorn. But most startups fail, right? So high risk, high return. It's a really great way to have some higher returns on your portfolio, but I wouldn't put all my eggs into one basket, period, right? So crypto has been a super hot asset class, let's say. Again, and we talked about this a little bit before we started recording, like there's 2 schools of thought. One is, I think when you're early on in your investing journey, you can operate 2 ways. And it really depends on what your risk tolerance is. And, you know, are you an investor or are you a gambler? And being intellectually honest with yourself around what you truly are is important. And knowing what the cost of that, like what is the
It's costing you, yeah.
yeah, what is it costing you, right? And so you could be like, you know what, like I'm going to go all in on crypto. I've saved up $250,000 or 100,000 or 50,000, whatever it is. I'm going to go all in on crypto and I'm going to 10x my money, right? And a lot of people that went all in on crypto 10 years ago, 5 years ago, like they have done exceptionally well.
Yeah.
It's also highly volatile, right? So if you're all in on crypto and you're 25 or 28 or maybe even 30, awesome. If you're all in on crypto and you have a family that you're taking care of and you're, 40 or 45 or 50, it's a really, I would suggest it. I mean, for me, I wouldn't do it for, I'll just speak about myself. I wouldn't do it for me. So I have two young children. Um, I would never put my entire portfolio into crypto as a way to like,
Okay.
get to 100 million. Like I just wouldn't do that because it's a risky move and I'm not prepared to lose it. So and I shared this with you as well, I'm friends with a couple of well, just ultra high net worth people. None of them have their money in Bitcoin. So it's really interesting. The way that they invest is very much like I'm going to invest in companies that I have direct control over. I'm gonna like run my own fund or like have direct investment in real assets, like whether that's real estate or it's a shipyard or it's a factory or like not even they don't actually even really invest in equity markets as much, right? They're very much and you can't do that when you only have, a million or half a million to play with. Like you can't buy a shipyard. So they're billions, right? So these like bigger games that people play. Um, so having a diversified portfolio where you have whole different asset classes is important. And then the other thing that I talk about with the women who are inside Wealth Bravery is around liquidity. And liquidity just means how quickly can you convert that asset into cash? Or so
Mhm.
real estate, if you're holding the physical real estate as opposed to like a real estate investment trust is not super liquid in that if I needed the cash tomorrow, I couldn't like access it, right? If I have a stock portfolio and something happens and I need access to $100,000 like tomorrow, I can sell I can sell down part of my stock portfolio. It's liquid, it's accessible. So you want to have a mix of assets as well that are um, that are a mix of like liquid and illiquid. So my angel investment portfolio, as an example, is not liquid, right? That's like it's a 7-year hold, 7 to 10 years. You'll either have like a massive exit or a mediocre, or it'll go to zero and then you just, like lesson learned. But again, if you're going to play in the space, you need to not just do one investment, you need to do, up to 30 small investments.
Yeah.
A lot. Sorry for I could talk about this forever, but like hopefully that's helpful to people just to think about your liquidity, how risky are you? Everyone's like, I have a really high risk tolerance until you lose the money. And then you're like, oh, that sucked. Like I didn't actually want to do that. Yeah.
Yeah. And oh, what I love, like as well, like I'm remarking again, that you gave us this picture. Right now we have a picture, and because like you mentioned, you mentioned those of the details of like becoming aware. What are those assets? If you need the money by tomorrow, what are those assets that you can access the money in a way that is really fast, or like that money is not going to be accessible between 7 and 10 years. So when we have that understanding, we can diversify our money, right?
Yeah.
And something that I would love is to explore as well here when it comes to assets. And you mentioned different games, different levels. And I know if a woman she's already investing, she's already has skin on the game, how do she knows? And I know this thing, we never know when we're ready, but when do you suggest to start playing bigger?
Yeah. Well, I think we I think we get to define what bigger is, and I think bigger
Mhm.
is kind of in the eye of the beholder, if that makes sense. I think, you know, um,
I'm gonna go to beyond the $1 million. I don't know. Let's
yeah,
10,
yeah,
10 million, 15, whatever.
yeah. So if someone's just like truly just starting out and they don't really have any investments and they don't have an investment portfolio, they're just really good at generating cash and maybe they're holding a significant amount, and a significant would be like anything beyond 100,000 would be like if you're holding it more than 100,000 in cash, then my question would be like, why are you doing that? Like, what's your reasoning for doing that? And there might be a very good reason to do it. Or I think a lot of people get a sense of safety and security from being able to, log into their checking account and see that. Like I know someone who, is holding like $1 million cash in their account, and that's great if you have 10 million sitting in, investments. But if that's your only asset, then that's not a very smart thing to do because inflation is eroding that every day. So if you're just starting out, um, I think the simplest and safest path, honestly, I think is like investing in like a stock market index as an example, because you can log in, you can see how it's performing. There's some direct feedback of, you made this move and now it's up 10% or it's down, or you get to just kind of see how markets move and really understand how markets move. If you're investing in something like real estate, and again, I think it's just part of the work that I do with women is around understanding what is the game that you want to play.
Mm,
Because
yeah.
if you choose to go in on real estate, that's perfect. But then like go all in and master that investment class, that asset class, you can do very well, right? Even though it's not diversified, if you're like, you know what, I'm just going to be like an expert in this type of asset class, I'm going to build my wealth around that, and this is like my wheelhouse, right? Perfect. Um, if you're just like throwing money all around and you're not tracking it, it's hard to then understand what a good deal is if you're not consistently playing in the space and understanding, how to value one opportunity. Like how can you tell whether this one or this one is better or this one is better if you have no comparable, right? So um yeah, the nice thing with public markets is you can go in, it's very transparent, it's liquid, you can sell it, take it back to cash, you can do something else with it if a new opportunity comes up. Once you've put, you know, again, I'll just use 100K into a real estate opportunity, it's harder to exit. There's you're kind of more locked in, right? It's a bit harder to have a sense for how that investment is performing because the market isn't really that transparent. Uh, Not like stocks where you log in and, Apple's up 2%, it's down 5%. Um, so I think I lost my train of thought because you actually had a question. I don't think I answered it. Was it around like how do you, for someone starting, how do you make the
I
investment allocation?
think I was asking when someone is already playing, when someone has already portfolio,
Yeah,
when uh, and I know you mentioned that bigger in the eye of four, right?
yeah, yeah,
When she considers that she has the assets or the skin on the game to go bigger.
yeah, yeah. Right. So again, I think it depends on your risk appetite and your desire to really
Make
your
this happen.
curiosity, I think, right? Like are you curious and do you want to master or not necessarily master, but like do you want to have exposure to a different type of investment class as an example, right? So ultimately, like I'm having conversations right now because I'm switching financial advisors, and I have a financial advisor who manages my equity portfolio, and then I do all the alternative stuff. And as I'm interviewing different, potential kind of more boutique wealth advisors that work with people that are kind of like beyond the first million type of thing, there is like this one in particular that I'm speaking with. They have like ultra high net worth clients who place their money with this firm. And they're like when you're at that level, like when you're at, 50 million, 100 million, a billion, like plus plus,
Yeah.
it's much more about preserving capital.
Mm,
Warren Buffett talks about the first rule of investing is don't lose money, and the second rule of investing is don't forget the first rule type of thing. It's
yeah.
much more about preserving capital than how do I, take a billion and make it, 5 billion. I mean, yes, you can play that game with a part of it, but that's not the game at that level becomes from, buying a business and turning it around, or like they're bigger. It's not like which stocks should I buy? Like that's not the
Right.
conversation at that
Yeah.
level, right? And so I think it's important to have a healthy level of um, if you want to play this game of like wealth building, then take 10%, 5% to 10% of your total net worth, liquid net worth, not including your primary residence, and look at, what are some interesting things? Like maybe you want to play in crypto. Maybe you want to look at angel investing as a way of impact investing. I happen to love that asset class. It's really, there's some incredible people in it, amazing companies, lots of women founded startups that I like to support. But again, I wouldn't place more than, well, I have higher because I have a different tolerance and a different game that I'm playing with. For most people, I would say I wouldn't put more than 5% to 10% into these riskier investments, quote unquote. And then the other part of your asset class should be like, I'm preserving this capital, right? It makes no sense, I think, to say we talked about this earlier, like say you took 100K and you put it in all into crypto and now it's, I don't know, let's say it's 1 million, right? And now you're continuing to double down on crypto, which is what most people will do because they've had this evidence of I played this game, I got rewarded, I'm going to keep playing the game, I'm going to get, and so we believe that like the market's going to keep going up. And we also forget that we're playing long-term games, right? So what you want to be doing is like this this incredible return that I got, amazing. How am I positioning that to multiply for me 10, 20 years out? And if you're fully convicted that crypto is the place to be for the next 20 years, then, by all means, like do
Do
that.
it.
But that's also putting all your eggs in one basket. That's also, making a big bet on what the future is going to look like when it comes to, and truly like nobody knows, right? Nobody knows what the future will look like. Hindsight's 2020, but the reason we diversify and have, spread our risk is so that just like with clients, right? Like you would not be comfortable as a business owner having your entire income come from one client. Like that would be foolish, right?
Yeah.
So it's the same thing with your money, is you want to spread the risk so that if one like totally tanks, the other one kind of compensates. But ultimately, when it comes to investing, it's like, well, why are we doing that in the first place? And it's to create freedom, to create choice. And so again, going back to I think our first conversation around understanding what is your number, right? So if you say, you know what, like once I get to, I'm making this up, like once I get to $5 million net worth, at a 4% drawdown, which is kind of like the average that financial advisors typically use in terms of how much of your portfolio can you withdraw and still not cannibalize the growth of that portfolio over time. So 4% of 5 million is like, I think it's 200,000. So, it's $200,000 a year if you did nothing and sat on your butt and I don't know, hung
Just
out
like,
with your kids or went for the massage or whatever, would that cover, like, would that be a good lifestyle for you? Would that, like, you didn't have to do anything. You just have 20K coming in, let's say 20K, like, assume it's 20, it's not quite 20K, but it's 20K a month. Does that support you? And the funny, I think when we celebrate these 100K months, if that is if your lifestyle cost is 100K a month, like you're truly, let's say that's your net profit, which I mean that would be, let's say it is, that's 1.2 million a year. To maintain that lifestyle without you having to work for it is something like a $30 million asset portfolio at a 4% withdrawal rate. So it really starts to put numbers in perspective when you understand the numbers, even at a high level, right? And then it's like, oh shit, like, wow, what is my net worth now? Oh, it's only 500,000. Well, you're gonna be doing launches for a very long time. If if
yeah.
if that's the lifestyle that you're accustomed to and you can't
Oh,
can't step
sustain.
back, then you're actually not free. Like
Oh.
you're rich maybe, but you're not free.
I love the fact that you put this example about the 30 million and the 4% withdrawal, because like that gave us like I said for the third time, a clear picture. I'm really visual. So it's like, damn, like if, like you said, if you have those 50K, 100K months, but we don't have something that actually produce money while we sleep, is kind of a cage, if that makes sense,
Oh,
because
very much.
it's not
Yeah.
freedom. Yeah, it is
And
not.
someone like this is the thing, like someone who has even a $2 million net worth is richer than someone who's making 100K a month.
Yeah.
Because they have their time and they have their freedom of choice and they have their options. And so that to me, again, I think it depends on how you define a good
Freedom.
life and how you define freedom. And to me, I define it as I have my time. I don't have to. I get to. I choose to, but I don't have to. And I think a lot of people have to. And
Yeah.
that's not freedom. That's you've just built another hamster wheel. Like a lot of people, exit their careers to start their own business, and you've just created another like another
Another
hamster
job,
wheel to
pretty
keep
much.
on. Yeah. And so what does it mean to have a $30 million net worth or even like $2 million of net worth? That means that you have generated income after tax, you've paid tax on it, and you've held on to it. Like you have either held on to it directly or you've invested it and now, whatever you invested has multiplied to get to that level, the 2 million or 30 million. So when you think about like, okay, I'm making 100K a month, that's 1.2 million a year.
Yeah.
That's 30 years.
Damn it. Oh
I
God,
have to hang on to all of it
in order
to have a
to,
$30 million net worth.
yeah.
Assuming straight math, right? Of like, you're not getting the investment returns and compounding, which is like definitely, I mean, compounding and investment returns make up that's why people invest, right? It's your money's making money while you're sleeping.
Mm, that is a huge change of perception, because like you said, when you put it in years, we put it at long term, it's not a good game, even if you are bringing 100K a month.
No. And I think this is
Um,
I
like
think people
money, yeah.
understand. I don't think people understand just how much it doesn't matter. You make 100,000. What matters is how much assets do you own? Like, what are your assets?
What do you keep and what is producing for you actually? And now,
Yes.
yes. And I think, Juliana, and I think we mentioned this on the first part of this podcast, episode 1, where right now, and what I really love about you, and we mentioned this as well, you are a projector, and many of the listeners
Mm,
are aware of human design and even Gene Keys. But going back,
yeah.
you as a projector, you have this ability to, and the way even that the way that you are even explaining it here is really clear. And even if we don't have all the words, or we don't understand pretty much like every single word, we have now a picture. And that was one of the things that I was sharing with you, that you have this ability of guide, of teacher, of, it's really smooth the way that you do it. And I think that you are creating a new paradigm, especially for the woman online, because if we are really, if we really want to step into that wealthy woman, we have to understand this.
Yeah.
This is key.
Yes.
Even for me right now, when you put it that as a years, like 3 years, receiving 100K per month is 1.2 per year, and it's like, oh my God, I'm blowing. So I have to do this 3 years.
Yeah. I mean, that's straight. That's just like straight math, right? So I want to be really careful that because if you actually ran it through like a compound interest calculator and you assume that the stock market returns on average 10%, let's do the stock market, right, returns on average 10% a year, because that's kind of been like the historical average. And so you say, okay, I'm starting out with a million compounded at 10% for the next 30 years. That's going to be a bigger number than like a straight line multiplication of you know
Yeah.
the 10,000 on the return on the or 100,000 return
On
um,
the
on the 1 million. Yeah. So it's just, I think the point is that the the energy and the frequency of making money and earning money and exchanging time and providing value in exchange for money coming in, that's a very different energy and frequency than what it takes to like multiply the money through investments, if that makes
Yeah, it makes a lot of sense. And while I was listening to you, one of the things that it keeps coming is nervous system. Your nervous system has to be really regulated. And
yeah,
even for the high risk or those pumps of the
yeah,
investments that are really you feel comfortable. And once that here when you mention about energy and about being able to receive, to hold, and to expand, we have to also do a deeper work. And I know many people are doing are doing millions. They're not doing this work, but one way or another, they're already land that is their normal, so that's why it's so easy for them. But sometimes, like you mentioned, receiving the money, it could be a frequency that you already feel that is your new normal.
yeah,
But when it comes to grow, to expand that money, it's a different game, and you have to also be mindful about the things that produce inside you. Even thinking about, like you mentioned one thing, and I think some of my clients do this as well as me. I love to take just the screenshot of my bank account. Like many people for the long time, I will say for the first time 2 years on my business, I was just like, I don't want to see the bank account. I don't want to see it. But I was like, yeah, right now, I love just to have a screenshot. But I know by talking with you, and that is just a form of feeling safe, but that is having money on your account, but it's not doing nothing. So what I'm trying to say here is our nervous system has also to be regulated and ready to see how that money goes towards an investment, and don't seeing the results fully yet, and feeling rich and feeling comfortable and being willing to move forward.
yeah, yes. I ran the math on this, and I unfortunately don't remember the numbers. I mean, if you go into my IG, well, I don't know which which day I posted it, but um, there's also a very big difference between, speaking of kind of nervous system regulation and how we think about investing. I think women in particular, um, when you say, and I've invested in some really like high ticket, coaching,
Yeah.
like at levels recently where I would never have, like when I was in my wealth building phase, I would never have done that because first of all, it's not the world that I was in, which is like this online coaching thing. I was, a business person doing business things. I mean, in a corporate environment. And so the thinking is just very different. And your appetite for like what you're willing to invest in yourself is not anywhere near what I see in the online space of,
Mm.
entrepreneurs in the online space investing in themselves. There's also a big difference that I see. And again, I mentioned I invest in, in startups and founders that are kind of like pre-seed and seed. There's this, in my mind, like there's this very big chasm between the online coach entrepreneur and this belief that you have to invest in yourself continually in the latest thing versus a founder who's like, I have this idea and I'm going to go raise capital and I'm going to build a business and then I'm going to sell it and I'm going to get, it might or might not be venture backed, but they're not taking the capital that they raise from investors and putting it into coaching. Like if I invested in a founder and I found out they're putting it into coaching because they don't feel equipped to
Confident
build this
or,
company, I'd be like, you're not the person. Like I'm
oh
not
yeah.
investing in you, right? Because you have to be convicted that whatever is the idea that you have, you're going to work on that and it's within you to deliver that. So it's just, I mean, this is like a whole other conversation, and I haven't fully integrated it in my own thinking but there's very much a difference between the online coach entrepreneur versus a founder that I would invest in.
Okay.
Both have
Yeah.
an idea. I have an idea for a business, but
Business.
they're very different in terms of level of like how they execute and how they use capital to build their business. So in this world of online entrepreneurship, I think a lot of people have been conditioned that to succeed, you need to invest in yourself. You need to work with other coaches that have invested in themselves. You need to, like, there's this really weird thing that happens. And I think a lot of women, again, like, you look at an investment, you say, well, I invested six figures in myself with this coach, right? Or I invested multiple six figures this year in coaching. That's great. And I think the mindset piece is really important. And like all of those things, like how do I do this? And how does this work? And ads
Yeah.
or no ads or funnels or whatever, right? Again, going back to like being intellectually honest with yourself, it's helpful to look back at the last 3 years or 5 years and look at how much money did you invest in coaching and
Mhm.
what has been the return on that investment. And if it's just like, I feel better, I feel like I can regulate my nervous system more, I feel like, I met some really incredible women, I found my tribe. You just have to be, I think, really honest around, um, did you produce a return on that capital?
And
It doesn't have to be a financial return, but are you satisfied with the return that you got? So
oh,
are you happy to be happy and in a better place energetically, mentally, all the things? Or would you rather, this is such the reason I'm having this conversation is I had this conversation with myself, right? Like if I look at, okay, so let's make up a number. Let's say you put in $250,000 into coaching. If you put $250,000 into the market and you let that ride for the next 20 years, that would be like millions of dollars, right?
mhm.
So I
Yeah.
think we just have to be, and you can't live your life that way. You can't be like, if I buy this latte today, that's like $500 latte in 30 years. Like we can't live that way, but it's just helpful to
To have.
understand the decisions that you're making and the return, and then put that in the context of like now investing, right? So I think for a lot of people, it's much easier to invest in themselves through coaching, let's say, or even like, and
Yeah.
I've done this, right? Like like business class ticket to Marbella at this like incredible event that like raises my vibration, and buying the Fendi purse, and like you feel amazing and it's awesome and I like no regrets. But um if you're not making those moves from a place of overflow, meaning you already have a level of wealth secured and it's comes from overflow, if you're spending that money on these experiences when you haven't like kind of secured a basic level of financial security for yourself, you just have to be mindful of how long you're going to play that game and hypnotize yourself into thinking that the more I invest in me, the more at some point this is going to be an investment that will pay off in the future. Not to
Yeah.
be like all negative and all the things.
No,
It's
but
just
it's
how my brain thinks. So there's just one last thing I want to say. The tendency I tend to see is, and it's well, it's not my experience, but the tendency I tend to see is it's easier to invest in ourselves in like coaching and things like just where I talked about like experiences, up leveling your vibration, your energy, whatever. Then it might be to make 100K wire um, to a venture capital
yeah.
investment,
Totally.
right?
Totally. Guys,
I
like,
don't know about this. I don't know how this works. Like it's locked in for 7 years. I don't know if this is the right decision. I don't know if this is gonna pay off. Like 100K is a lot of money just to be like, poof, here it is. But like we're doing it in like so we assign different filters to it and different meanings.
yeah.
I just find that really interesting and curious.
Yeah, and I really appreciate that you're bringing this topic because it's, let's, like you said, let's be honest. I mean, how much we are investing in us, much money we were putting towards ourselves. And I think in the online business, I think I didn't share with you, or I don't remember the first podcast, but I used to be a dental assistant back in 2019. So bro, I was just listening to audiobooks, but I was like investing in myself, whatever. I was not even aware of nothing. And my first ticket, high ticket, or my first mentor, he charged me 10K. So I made a transaction of $6,000, and the rest I did payment plans or something like that. And I shared this with a woman that used to work with me, and she said, "Are you crazy?" I'm like, "What the fuck?" And now when I look back and I do the math, it was worth it, because I will say that was in 2019, and then I released myself from that job and I started working with a consultant, whatever. In the first 4 weeks of my business, I made 30K. So for me, it was worth it. But
Yes.
now that I'm back engineer, it was like, yeah, those 10K pay off like even more, because I was able to attract my first business partner that I'm no longer with him, of course.
Yeah.
That I was able not only to feel, like you said, not only to feel great and to like have be in this high vibe, but also to grab the tools and do something. And when
Yes.
you see that, plus you're feeling good, and that doesn't mean that every single investment is gonna pay just off, but if you see the return that
Yes.
goes beyond or feeling good and having just more friends. In
Yeah.
that case, you can keep the same job. But
Yes.
when you see that, it's like, well, if that make me in the first 3 to 4 weeks, those 30K, and now I know more people. That was back in 2021. That was worth it. So it was still,
Yes.
well, that was a big stretch for me. I'm telling you that the first when I wire, well, I didn't wire. He sent me like a Stripe thing,
Yeah.
money, and my nervous system was jacked for the first two days, and after that I was like, well, I did it, whatever.
Yeah.
So but I truly understand that point, that where you're coming from. You have to be really mindful, because it's
Yeah.
so easy to invest, having the funds, invest with a coach, but what are the purpose behind? What are the tools that you want to integrate, or the tools that you will utilize, and how much is going to be your return on investment in that specific thing?
Yeah.
Yeah.
Yes, 100%. I think it's important to come from a place of like, do you really need this to truly get yourself or your business to the next level? Or is this because I think a lot of investments are made from a place of I'm not ready yet. I don't feel ready yet. I don't feel good enough yet. So if I pay this person, then, somehow it'll elevate me. I think there's some of that. But I do think that there's massive, again, like there's such duality and it's such a fine line, right? Like you have to, I think being able to hold both ideas in your mind at the same time, because this there's massive power that comes from someone who was an employee, as an example, switching to like, I actually want to create wealth
Entrepreneur.
on
Yeah.
my
Oh
terms.
my God.
An
Yeah.
entrepreneur. And it's a massive identity shift, first of all,
Wow.
a big jump. And there's so much, again, speaking about freedom, like there's such freedom that comes from being able to generate your own income
Yeah.
without having, it being in a system that doesn't work for you or you choose not to be in. And when we think about, um, people that have created like massive wealth, it's not been through, I mean, unless you're like, Jamie Dimon or like uh, running a hedge fund or something, it's typically because you took risk and you're an entrepreneur and you created something of value and a bunch of people want to buy it, and you had a nice exit and now you're like a multi-gajillionaire. Like, but that doesn't, you rarely hear. I mean, it can happen if you reach certain, like the upper echelon of the corporate world. As an employee on a fixed salary, there's only so much that you can do because you're capped, right? And so again, just being clear on, I just go back to like, what is the game? And there's a cost. There's a cost to being an entrepreneur. There's a cost to being an employee. What is the most aligned, free life for you? What is the game that you want to really play? And then go play that really well. But the
Mhm.
financial part, I think, is a consideration in both cases, right? Like having assets, where in both cases the ultimate thing is freedom, right? Freedom to, and so the way to secure that is through having assets.
assets. Yes, and I truly agree with that. When so much has to change if you're coming from the 9 to 5 to be an entrepreneur, because no one is gonna no one is gonna tell you what to do, when to do it, what people do you have to hire. And I think for me back then, now that I'm back engineer, it was just like, I'm gonna make this work.
Yeah.
I knew, I didn't knew like about like why it was not possible for me. I was just like, we're just gonna charge this and it's gonna be fun and whatever. So it was really fast. And of course, and that was in 2022, in 2021, 2022, I got a little setback because my nervous system was this and that, but I was able to navigate that. And but the thing here is as well becoming aware of, like you mentioned, the game that you're playing, and if that game is helping you, if
Yeah.
it's moving you, if you can see the before and after from 5 years ago, 3, 4 years ago, who you were and who you are right now, and what are the things, not only monetary, but that, let's be real, that counts a lot. Like that defines even
It
the
is.
what
Yeah.
water do you drink. And sometimes, especially for women, it's like, we're in the coaching industry, or like we're healers or light workers. Yes, you are, that is your gift, but let's talk about also about money. This is a business. It's not
Yeah.
about like just like charity, if that makes sense.
Yeah. And yeah, I just think I've always had a very kind of future orientation. And again, I just go back to um, like the fact that my kids are little and I can drop them off at school and pick them up, and I don't have to travel internationally. Like there's so much benefit that comes from being able to do things on your own. And then I don't, like, I'm fully
Yeah,
available because I
yeah,
have assets that are paying me, that I secured, over the last several years. So
that is freedom, totally.
I think so. Again, I mean, we're all gonna get old. This is, unfortunately.
That is
Um,
that is not being
so
inherited.
then there's a certain lifestyle that I want to live when I am a grandmother. There's a certain lifestyle I want to live now. And it doesn't include hustling, as a projector. It's not I mean, I did that for a long time, and yeah, I still hustle. Like if you ask my family, they'd be like, no, you're always working. I'm always investing. I'm always like, I'm doing things, but
You choose to do
I'm
it. You
making a
get
choice. Yeah, I choose to do it. Not, I don't have to do it. I could not do it. Um, and then I think for women as well, we're living longer, right? And so again, you have to, like, well, how long, you know, what's your ideal life health span, right? Or life, so we talk about lifespan and health span. Um, Most of us will likely, I would imagine, if you're healthy, like live to 90, 95 plus plus. And so you kind of have to think like those last 40 years,
what is the
you want
quality
to
of
be doing what you're doing now, between 60 and 95.
oh God. That's no, that
And
is true.
so,
Like when we
and
think
so
that
if
way.
you don't, then you have to just be real and be like, well, how am I going to, who's going to support me in those 30, 40 years? Like, where's the money going to come from?
And from that place, taking decisions, and decisions like you mentioned that are coming from a long term, and not only for the short term. And I think that is one of the gifts that you have as a guide, as a mentor, that you allow us to see. And I, like right now, I'm just having so many like um insights right here of things that I'm doing and things that I want to do this year in the coming years, because it's so easy just to get into the mhm, dopamine hit of like, well, I'm just doing okay. Or if this month didn't perform that well, okay, I still have something right there in the bank, but it's not something that can hold me for, like you said, for
Yeah.
years. No?
Yeah. And then I just maybe the last thought is
Yeah.
there's, someone who started 20 years ago, and I don't have the exact numbers, but like there's a massive difference in if you had started 20 years ago or 10 years ago, or even if you start today, right? you would only, let's say 20 years ago, you would only have had to invest like $500 a month every month, and you would outpace someone in terms of your wealth growth than someone who started 10 years later investing double the amount. Like there's some, I don't have the exact numbers, but there is a massive benefit, like time value of money, compounding, right? The sooner you put money to work, the sooner the power of compounding works over time. And it truly is like magic, right? Like you can just, you put it in, you never touch it, it compounds. The longer you wait, the shorter that compounding window is, and the more you have to like start with like real money instead of what I call like magic money, which is compounded money.
Oh, you
So
know, yeah.
starting sooner is super, super important. And again, just going back to, I think a lot of women will say, well, I'll start investing when my income gets to $100,000 a month. And I would say, if you're not investing when your income is 10,000 a month, you're not going to invest when your income's 100,000 a month
And
because
also
it's
like
just behavior.
it's a habit, yeah, like you said,
Yeah, that's it.
it's a habit. And I think that it's we're, as you may know, we're creatures of habits. The sooner that we can just set our mindset to have that habit or integrate that habit, even if at first it feels kind of like uncomfortable because we're not accustomed to that, the better, right? Let me tell you, Juliana, you allow me to see so many things right now. Like it's just mind blowing. Like, and so I think so many of us, we, like I said before, we just get into this illusion of like everything is just fine, but uh, it will be finer if when we have something that actually provide those the lifestyle that we want without being present. And I think that is the true freedom.
Yeah. Yeah. It's the one that I think a lot of people, ascribe to. Um, and really like ultimately it's you and the people that are closest to you that you have to be with and impress. And I think spending money on trying to impress people that
They don't even know you, or they're not
know,
even
or
you.
it's like if you're spending on things on money just to impress. I actually think that was a big contributor to me building wealth as quickly as I did, because I never really like cared to impress people when I was young. Like I was like, well, I'm gonna do me, and I don't care if you like it or not. Honestly, like I'm just gonna do it. But not everyone is that way, and it's the same thing with like health, right? I'm on this like renewed fitness journey because I was super active before I had my kids, and then I kind of slowed down a little bit with two kids. But you it needs to be like a constant area of focus
Yeah,
in life, right? You work out every day or like regularly, and you eat healthy every day. It's not like you can't eat like crap for a year and then expect to
have the
like
result.
have the result. Like it doesn't. And it's the same with money. It's compounds. Like the impact of your choices, your daily choices compound.
And
And
I love
the other thing was, if you're carrying like a credit card balance, you need to pay that off. Like that is do not carry a credit card balance, period. Like, I mean, I don't, these are not conversations I have with the women that I work with, because none of us are carrying a credit card balance. But if anyone's listening and you are, um, you need to really, because compounding works the other way as well. It works um, on debt, and the rates that credit card companies charge for interest is criminal. And I always see, like, you get your credit card bill and it's like your balance is whatever it is, let's say it's 20,000, and your minimum payment this month is, I don't know, like $100. Like if that's all you did, which you're allowed to do because that's your minimum payment, the compounding on the balance at 14% interest or whatever it is, I mean, and I think they have to show you how long it'll take you. It'll say like it'll take you 50 years to pay this off. One credit card bill, and most people carry that, compound that. So yeah, like I don't think, well, hopefully anyone listening doesn't is in that not in that situation, but you need to. You need to
Put
put
yourself and I will say
It's
neutral.
a gift. That's a gift.
Yeah.
Yeah, like at least be neutral. At least be at zero. Like,
Yeah.
not in a hole, but
That's a
like,
good point to start. And one of the things that you mentioned here, and just before we close up
yeah,
our podcast, that you mentioned this example of the exercise and fitness. There's a daily thing. It's not about just like, well, I'm just gonna try to cheat. It will show up. It will show up in one point or another. I mean, you can do all the exercise, but if your nutrition is not on point, and I'm not saying that really like a strict like a military thing. Well, actually, you can do that, and
yeah,
that when
yep,
you have decent results. But especially when we have kids, I will say if we are 90% like really like mindful with what we eat and our exercises, the other 10% is just fine. But
yeah,
if you want, and I think we touched this point on the episode number one, if you want to go to the extremes, you have to be 99% on point. 90
yes,
in everything. I remember one of the competitions, I was just like, even sweeteners, I was allowed to have a zero sweetener, like was I think it was trivia
yeah.
once a week because the salt, the
Because you
sweet,
want a certain result, right? Like you want an extreme result that requires extreme actions. And so, and you track it. And it's the same with money. It's like when you're competing or you're doing a shred or you're preparing for a competition, there's extreme things that you do that are above and beyond what the average person does, but the average person doesn't get to stand on stage and get, like
you can
I nor they want to, but like it's a different beat.
mindset, yeah. And you have to go extreme, and it is the same thing for like you said, for money. You have to choose what game are you playing, and if you're willing to do the things, because when you're in those kind of preparation, and I'll come back as well with money, there's no room for mistake. I mean, I'm not gonna say that you like 0.1%, but I will say 99%. You have to be really mindful, and you have to keep your why in the front of your head. Like I'm
Yeah.
doing of that. And yeah, you get into a physique that many women or even men they will love to just have, but they don't know the behind the scenes. And even when you see those bodies when they're like all prepared and they like amazing things, let me tell you, when you are like a 4% body fat, and even if you're a female, I reached that point, and it was like at that point you look so beautiful on stage and all those things, but you don't think about like that. You don't think about how you look. I mean, I was like, I went down to my last show was like 90 pounds. Like, and for me, it was like, oh my God, I have to get leaner, leaner. I was like leaner. And
Yeah.
after that, of course, I did a reverse diet. It was like I went up to 119, but it was kind of, there is a process for every single thing, even for, well, like you mentioned, the portfolio, the diversification, where we what game that you want to play, and from that game what are you willing to risk, what I will be the short term, long term. So we have to have a process, a protocol. It's not just like I want that body, I want that money, let's do it. It's
Yeah.
what are you willing to do.
Yeah. And I think just sticking on this analogy, like for one more minute, like when you think about fitness, there's multiple pathways, right? Like you can, and again, it's like, well, are you competing to be a bodybuilder? Are you competing to be a sprinter? Are you competing to be a long distance runner? Like, what is yes, they're all fit, but they all have different ways of getting there and different measures of like different things that they need to do to be successful, right? And so it's kind of the same with like, there's so many people who are like, I'll teach you to build wealth or yeah. And I'm like, well, I'm pretty agnostic. My whole I'm a firm believer in giving women the confidence to be able to make their own decisions around what is best suited to them in terms of their investment philosophy, their investment thesis, the kinds of investments that work for them. If you want to, go all in on crypto, amazing. Just understand what does that mean, right? What does that mean for you? If you want to be all in on real estate, understand what that means for you. And then even just to understand, like, there's so many different ways to make money and to hold assets and to grow wealth. And what we typically hear is like real estate and crypto, right? Or stock markets. Well, there's like a whole other universe of opportunities. And unfortunately, the way that a lot of the alternative investment space works is it's still somewhat gated. And you still, to get access to incredible opportunities, you need to have a network and deal flow and all the things. So that one of the reasons why I'm so busy is like I put a lot of time, energy, effort into building that network, which I share with the women that I work with. But I think that the point is that there's multiple pathways,
Yeah,
and really don't just trust someone as like this is the answer, because there's
there's plenty of,
for
yeah.
yourself what it is. There's plenty of ways, and really understand, what risk are you taking on, what liquidity does that create or not create, how are the returns compared to, other things, what does it require of you. Like I wouldn't want to be a day trader because I don't want to sit staring at a screen looking at like
Number.
candle charts, you know. But for some people, it's like I love it, and so that's a pathway, right? But it's not for everyone.
Yeah, and like you mentioned, and I think this is something that for the listeners is gonna be really, really, really good. There are plenty of pathways and
Yeah,
what teach either on fitness or mindset or money or well-building. It's actually the principles that in becoming you aware of what are the things that you want to do. One of the things that one of the House of Legends, and I think you already know, we do create, we brought a new division called wellness. And here I don't teach nutrition, I don't teach workouts because I know like after 10 years of competing and all those things, every single fucking diet works, every workout
yep,
works.
yep,
Actually, the principles, the things that you utilize and who you are and all those things and how you move and how you approach things. So there's so many things behind the scenes that I got a question, why you don't teach the nutrition? What do you, let me tell you, that works. I at one point, and this is one of the things that I think I want to share for the first time to hear to the listeners. At one point, I got to the stage, and one day before, I was still eating I was able to modify the macros in a way that I was able to sneak and sneakers.
yep,
Like, damn it.
yep,
I mean, and people are like, no, 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 that is, you have to eat so clean. Macros. There's
yeah,
so many ways. I mean,
yeah, yeah,
so many ways.
yeah. And maybe the competitive bodybuilder physique fitness thing, maybe the analogy in the wealth building space is um, there are people who are just like, save all the money and hang on to it all and don't actually enjoy, like that level of discipline is not a long-term way of being. You do that short term to get a specific result, and then you go back to living life, in a more aligned, gracious way. And I think it's the same thing for
For
wealth building.
every
Like, you can, if you wait too long, then you have to take those extreme measures. Then you do have to take extreme measures to try and catch up, or to try and, get a certain result that you got to pay your dues. Like that's
and
what I'm saying, right? And so you either do it, over a long period of time, and you go to the gym regularly, and you eat healthy. And but if you and it's not, it doesn't work necessarily, because in competition you're doing it not because you have to, but because you choose to. But
yeah,
it's important not to be so, Scrooge like, where you like enjoy your life, just spend on the things that truly bring you joy, not on things that
there's,
are helping you keep up with other people who don't really care about you.
yeah, and I love this part where you mentioned about seasons, like even for competing,
Yeah,
like those models and the Olympians and all that, I mean, there's seasons for competitions, there's seasons of growth. I mean, when I went from 90 pounds to
yeah,
119, it was just like every single week seeing the gains and feeling really good. Let me tell
yeah.
you. Right now, I'm in the phase of actually, I would say not bulking, but I'm eating
Like
like
recon. Yeah,
and I'm building muscle. And I know that this is a phase. And even if I don't feel that comfortable, it feels comfortable for the most of the people. It's like, you're really, really fit. I'm like, well, but I know that is part of the process. You know what I mean? If I
yeah,
want to go back and just be in a stage, I can do it in 3 months or 12 weeks or 10 weeks. I
Yeah.
think 10 weeks, because I know how to manipulate the things. But when it comes to a long term, and especially when we have kids, is understanding what works for you in this specific season. What are the things that you're willing to do? What are the things that are long term? And from there, deciding. It
Yeah.
goes.
Yeah. Yeah. 100%. And your training does change as you get older. So what things that used to work 20 years ago don't work
I,
20 years later. So you have to
let
take
me
some.
tell you, one of the things that I do every single month, and I do work with a trainer as well, like the mindset work I do it myself, right? And nervous system and all those things. But when it comes to that, I change my nutrition every single month, every single 4 weeks, because if you don't change this is how the pro work.
Yeah.
If you do your macros every single 4 weeks, I mean, by week 3, your body's accustomed to those macros. Even for the workouts, even if you do a set more or you decrease the sets and put more weights, so we also change the workouts. So in order to keep progressing, so that's why when you put yourself on that, you can see results in 3 months or 6 months, because we're changing every single month, every 4 weeks, and that requires an investment not only on the time, energy, but also monetary. You know what I mean? I was like, you know what, I'm willing to do this, even for the gaining muscle mass, which is like I'm not that lean, which is okay, which I'm really happy. But I have to understand that my diet, my exercises, the same thing as a market, that the market change. I have to be willing to go and I'm not gonna say gambling, because it's not a gamble. You can always go back to the same diet, but you have to be willing to trust the process.
Experiment. Yeah. Yeah. And I will say, like, I think in the wealth building space, like if you wanted to just like do a really boring strategy, you can get very wealthy on a boring strategy. When time is on your side. And then I think
Mm.
when time is not on your side, that people
Wall
tend to
Street.
make more gambles, make more risky bets because they're trying to get a big result in a short amount of time, because they, didn't do their work when they had the time, right? So
Yeah.
then you tend to do more risky
Risk.
investment because you're trying to get, a big result in a condensed period of time. So, but you can just, it's very easy to just set it and forget it. You take your 10%, 20%, as much as, you can push it. 25% would be like amazing of your income, and you invest it. Let's say you want to keep it boring and you put it into the S&P 500, and then 30 years later you'll wake up and all the money will be there, right? If you wait 30, 20 years and you try and do it at the last minute, then that strategy doesn't work. So you have to play more risky strategies.
Yeah, always come back to, like you said, to know your game, to know and to do whatever you can right now. Like if it is not 25%, it could be 10%, even 5%, whatever that number looks for every single one of us. And from there, moving accordingly. Like
Yeah.
it's the same. Fitness, business, relationships, it's a process. It's a protocol. It's not just like one thing. Or yeah, it could be like a bomb, like a crypto, but it's gambling. It's not playing a game that is gonna help you to evolve and to grow in the long run.
Yeah.
This was amazing, Juliana. I think we were talking about money, fitness, all that
Everything.
stuff. It was,
Yeah.
yeah, it was a
They're
mix
very
of.
similar. I use a lot of fitness analogies because
I love the fact that, yeah,
in that
I,
space as well. And so I just think there's so many analogies between being fit and healthy and being wealthy. So
yeah. And by the way, you look so beautiful. I was just seeing your pictures, like, yeah, you're definitely doing the thing.
thank you. Thank you. But that's also a habit, right? Like I've been doing that for a long time. So again, yeah, you can
It
make
is,
a take a step sideways when you have kids, and then you can re-engage, and you're not starting from the bottom, because I made deposits for decades, right? So I withdrew a bunch, and now I'm gonna make deposits again. It's kind of like that.
yeah, and like you mentioned, when we have kids, it's kind of different, but at the same time, we can enjoy it and
Yeah.
really have. I mean, one of the things that I really, or an idea that I did a step for myself was like, I have an amazing body and I have 3 kids, and that's okay. I mean, I don't have to explain myself. Like I can be both,
Oh, really not.
you know.
Yeah.
We can be
100%.
both. Yeah, looking good, feeling good, having the business, having the money, having the kids.
Yeah.
We, but that takes that is just the result. The behind the scenes is a lot of work, but if we're willing to do what it
Well,
takes.
it's a decision. You decided. You decided that you wanted to be fit. You decide you want to be wealthy. You decide you want to have kids. You decide you want to be a good mom. You decide you want to be a good partner. You make a decision, and then you take the appropriate action to
Do the thing.
yeah.
Yeah. And I love the part that you said, and now to wrap up the podcast, where there is you have to trust yourself. And I think we mentioned that in the first podcast as well. Trusting yourself and trusting the process and understanding that there are different pathways and do what works for you and what feels right.
Yeah. Yeah. And yeah, like get the support that you need and put yourself in rooms where these conversations happen, right? Like if you wanted to, again, we will wrap, but like if you wanted to be, you know, on stage, like you're not going to do that by yourself. You'll hire a coach, you'll hire a posing coach, like a training coach, you might meet with a nutritionist. Similarly, if you wanted to, you know, build wealth using alternative investments or using stock market, or like you really don't know where to start and you wanted to have a bit of a holistic picture to begin, like put yourself in rooms where women are talking about money unapologetically, so it doesn't feel like I have no one to talk to, and you know, my financial advisor is a guy and I can't talk to him, and there are people, there are resources, find them. Like we're all women.
Yeah, and especially when you want certain result, you want to hire a mindset coach, a well advisor, a nutritionist, I don't know, even someone that cut your hair. You're not gonna ask the plumber. You know what I mean? You're not gonna ask your mother. You will ask that someone who has the results. That's it, period. Even if the other areas of their life is not on check, which actually when one area of your life is on track, the other ones are at least 80% work. I'm just saying that maybe they're not perfect, but at least 80%.
Yeah. And I would say the place to start, I think, is fitness, because fitness and energy and vitality and like the energy to have the conversation, the energy to put yourself in the room, the energy to think, that all starts with your nutrition protocol and, you know, like moving your body, and like that would be the first place that I would start if I wanted to make a massive change in my life. You know?
And that also teach you so much, and you know about this discipline, nor feeling like desperate to see the results by yesterday, no, by even by tomorrow, by yesterday, and trusting the process and seeing those changes and actually acknowledge that and just keeping momentum.
Yeah.
We don't see results in one day, in 1 week, or maybe in a month. You start seeing how your clothes look like and feel like, and then you can see more results, but it's just a compound effect as well.
Yes.
Yeah.
Yes.
Thank you so much, Juliana. This was
Thank you.
Make sure that we want to put all the details here on either above or below this video, and also together with the other, the first episode, by the way. For you, if you listen to this episode, go check first the other one. Well, if you already arrived to this place, take a look on the first one, and then you can come back and you will have a better understanding. This was amazing.
Awesome. Thank you for having me.
Thank you so much, and we'll see you in the next. Thank you so much for being here. Your presence is greatly appreciated, and it truly means a lot to me. If you could support us by leaving a 5-star review, it will help us to connect with more extraordinary and influential women like you. With that being said, thanks once again, and let's look forward to an amazing and legendary week ahead.